Welcome to the Deep Dive. We're here to cut through the noise of earnings calls and give you the essential insights.
That's right. No waiting through hours of audio. We pull out what experienced investors really need to know.
And today we're tackling the CVS Health Q1 2025 earnings call. We'll hit the highlights, dig into the details, and wrap up with a This Is Not Financial Advice segment.
Sounds good. So starting off, CVS Health, well, they reported a pretty solid first quarter, especially considering what they call the challenging environment.
Yeah, definitely. Adjusted earnings per share landed at $2.25.
And adjusted operating income hit $4.6 billion.
Which led them to bump up their full year guidance. That's usually a positive signal.
Exactly. The full year adjusted EPS guidance is now $6 to $6.20. Up from, what was it, $5.75 to $6 previously?
That's the one. Show some confidence, I think.
And you see that confidence reflected in the revenue, too.
Yeah.
Nearly $95 billion for Q1. That's a 7% increase year over year.
And importantly, growth across the board, right? All segments contributed.
Yes, all segments. And cash flow looked healthy as well.
Around $4.6 billion from operations for the quarter.
Which prompted them to raise the full year cash flow guidance to now looking at about $7 billion.
Solid numbers. Now, beyond the financials, there were some leadership shuffles announced.
Right. Brian Newman is coming in as the new CFO, effective May 12th.
And Amy Compton-Phillips as the new Chief Medical Officer starting May 19th.
Yeah. And Tom Cowie is sticking around for a bit as a strategic advisor, which should help smooth the transition.
Good to have that continuity. Okay, let's dive into the segments. Healthcare benefits.
Revenue up 8% there, almost $35 billion, driven mainly by Medicare growth.
And those improved Medicare Advantage star ratings helped, didn't they, for the 2025 payments?
Absolutely. Better ratings mean better payments and potentially more members, though overall medical membership was kind of flat sequentially.
About 27.1 million.
Yeah. Declines in individual exchange and Medicare were offset by commercial growth. But then after the quarter ended, they did lose about 300,000 members.
Mostly from that individual exchange attrition you mentioned.
Right. But the profitability in that segment, wow. Adjusted operating income hit roughly $2 billion.
That's a huge jump, over $1.2 billion year over year.
Yeah, a really significant increase.
So what drove that?
A big factor was the medical benefit ratio, the MBR. It improved quite a bit, down 310 basis points year over year to 87.3%.
Lower MBR generally means better profitability, right? They're spending less on claims relative to premiums.
Exactly. And a large chunk of that improvement came from a favorable prior year reserve development.
Yeah.
Mostly stuff from Q4 2024.
How much did that contribute?
Net of revenue changes, about $400 million to adjusted operating income just from that prior year development.
Okay. Now, speaking of the individual exchange, big news there.
Yeah, they're getting out, exiting the business completely by 2026.
Citing continued underperformance, they're expecting a pretty big loss this year from it, too.
Around $350 to $400 million variable loss projected for 2025.
And they set aside a reserve for that.
A premium deficiency reserve of about $450 million for the 2025 coverage year, which actually negatively impacted the Q1 MBR by about 130 basis points.
So a new term hit for a longer-term strategic exit. Makes sense. What about medical cost trends overall?
Well, they said early signs of stabilization, but still elevated. Pretty much in line with their expectations, except for the individual exchange business, where trends were actually higher than they thought.
Interesting. And Medicare trends?
Still elevated in areas like inpatient, outpatient, medical pharmacy, but modestly better than expected, actually.
Okay. Part D performance was strong, they said.
Yes, but they are keeping an eye on specialty drug use.
Yeah.
Group Medicare Advantage trends are still under pressure.
Got it. Okay, let's switch gears to the health services segment. How did that look?
Also, strong growth. Revenue up nearly 8% to over $43 billion.
What drove that? Pharmacy drug mix, specialty?
Yeah, pharmacy drug mix, specialty growth, brand inflation. Partially offset by giving better pricing back to clients.
And operating income there?
Up almost 18% year over year, over $1.6 billion. Better purchasing economics and that favorable drug mix were key.
And operationally? Claims processed?
Over 464 million claims processed. Pharmacy services membership around 88 million. Big numbers.
Definitely. How about the healthcare delivery business? Oak Street Health Signify Health.
Also growing fast. Revenue up 27% year over year if you exclude programs they've exited.
Mostly patient growth at Oak Street and more volume at Signify.
Exactly. The number of at-risk members at Oak Street Health jumped about 37% year over year.
But they flagged some potential cost pressure there, too.
Yeah. Early signs in Q1 medical cost trends at Oak Street that they're watching closely.
Okay, let's move to the last segment. Pharmacy and consumer wellness. The retail side.
Robust growth here, too. Revenue up over 11% to nearly $32 billion.
Sure.
Even better on a same-store basis, over 14%.
And operating income kept pace.
Pretty much. Up over 11% to over $1.3 billion, helped by more prescription volume, better drug purchasing.
And those seasonal factors, right? Vaccines, longer flu season.
Yeah, those help too. But they did mention ongoing pharmacy reimbursement pressure and some softness in the front store demand.
How did the same-store sales break down?
Pharmacy same-store sales were way up, nearly 18%. Prescription volume up almost 7%.
But the front store was kind of flat.
Roughly flat, yeah. Up just under 1% if you adjust for the leap day last year.
Still gaining overall pharmacy market share, though.
Yep, script share grew to about 27.6%, up 70 basis points.
And they're moving ahead with that new pricing model, the cost-managed one.
Yes, that transition is underway.
Yeah.
Already covers 100% of commercial scripts and cash discount cards. Plan is to get everything else moved over by the start of 2026.
Okay, now, one of the really big pieces of news from the call was about GLP1s, specifically Wigovie.
Right, this partnership with Novo Nordisk. It sounds pretty significant.
They're making Wigovie the preferred GLP-1 on their biggest commercial formulary. We're talking tens of millions of people covered.
And the goal is increased access at a more affordable price point. Wigovie will also be available directly through CVS pharmacies via the NovoCare Pharmacy Network.
Seems like a direct response to the rising costs of these drugs, right?
Right.
Costs that have led some employers to limit coverage.
Absolutely. And they're tying it into their Caremark weight management program, combining the drug with lifestyle support. It really plants CVS Health right in the middle of this huge market.
A potentially game-changing partnership. On the flip side, though, they sounded quite concerned about legislation in Arkansas.
Yeah, they raised serious concerns. Said it could really limit pharmacy access, drive up costs, and hurt patients with complex needs.
They called it bad policy.
Pretty strong language. They're pushing back, trying to educate lawmakers there. And they mentioned other states seem to be rejecting similar ideas.
Something to watch. What about tariffs? Any impact expected?
They're monitoring it. Front store impact expected to be minimal since sourcing is mostly U.S.-based.
But pharma supply chain is trickier?
More complex, yeah. Depends on the drug, brand versus generic, country of origin. They did note the Novo Nordisk GLP1 is made in the U.S., which helps there.
And they're thinking about the wider impact, too. Medical devices for 2026 Medicare bids.
Right, they have to factor that broader environment into their planning.
Okay, let's wrap up with the updated 2025 outlook.
So full-year revenue is now guided a bit lower, around $362.6 billion, mainly because of those program exits we talked about.
But the healthcare benefits operating income forecast actually went up.
Yes, the low end of the guidance is now about $11.91 billion, thanks to that prior year reserve development boost in Q1.
Which means the full year MBR projection is now around 91.3% at that low end.
Correct. And the year-end medical membership expectation is slightly lower now, around 26.4 million.
Guidance for the other segments unchanged, health services and pharmacy consumer wellness.
Unchanged, yes. One interesting point was the timing of earnings. They now expect about 60% of the full year's earnings in the first half.
Largely due to that strong Q1 in health services.
Right. But they did add a note of caution for Q2. Consensus expectations for pharmacy services look a bit high compared to their internal view.
And they're watching for potential softening in consumer spending and maybe less vaccine demand in the retail segment.
Exactly. So still some caution baked in there.
Okay, that brings us to our favorite segment. This is not financial advice. Time for an outrageous, but maybe just plausible trade idea based on all this.
All right. So we have CVS Health making this huge play with Novo Nordisk on Wigovie, aiming for mass access.
Right, trying to manage costs, but also capture that massive weight loss market.
So here's the thought. Wegovy is great, but it's an injectable. What if?
Yeah.
What if someone cracks the code on a highly effective, maybe even better, oral GLP-1, a daily pill?
Ooh, that would be a game changer. Fewer side effects, maybe easier adherence.
Exactly. So the outrageous idea, go long on some super early stage speculative biotech companies that are deep in research on next generation oral GLP-1s.
It's your speculation, of course, like betting on a garage band.
Totally. high risk. But imagine if one of them has a breakthrough and a giant like CVS Health, already heavily invested in this space, either acquires them or partners deeply.
The potential upside could be enormous, disrupting the current injectable market dominated by Novo and Lilly.
It's a long shot, definitely
Right.
requires nerves of steel and probably losing your investment. But given the dollars flowing into GLP1s, it's a fascinating, if not entirely sensible thought experiment.
A true what-if scenario. All right, that wraps up our deep dive into the CVS Health Q1 2025 earnings call.
We covered the key numbers, the strategic shifts like exiting the exchange market and that big Novo partnership.
And potential bumps in the road like the Arkansas situation and cost trends.
We hope breaking it all down has given you some valuable context for your own thinking.
Absolutely. Remember, this is just our take on the call. Always do your own homework. What are your thoughts on CVS's strategy? That GLP-1 move? Let us know online.
Yeah, join the conversation.
Thanks for tuning in. Join us next time for another essential breakdown of the numbers driving the market.